welcome to the Diagnostic Trading Hour with Darrell Martin. And just wanted to let you know that we are up and running and ready to go. Appreciate all y'all patience out there. And this is basically what we want to do is we want to talk about how traders can maximize their leverage, limit their risk, and be one step ahead of the markets. And today we want to look at just some different varieties of trades that you can look at and things that you could have done today. You know, being a Friday, there was a big move with the S&P 500 today. And what could you have done with the Nadex trades, the spreads on Nadex, to actually take advantage of that? So what I'm going to do is I'm going to go ahead and pull up a few things, and if you have any questions, feel free to call in, and I'd be glad to answer your questions. But we'll go ahead and open up the Nadex platform here and put it on the screen so that way you can see exactly what it looks like. And if you don't have a Nadex account, all you got to do is hop over to tfnn.com and click on Nadex right here, and you'll be able to sign up. And all you got to do is click Create Account, and you can sign up for a live account for only a $100 deposit. That's all it requires for you to have that. You can day trade and everything with it. Or you can get a demo account. If you want to try it out first on demo, click Open a Demo Account. I suggest you open both, so that way you can see the differences between the two. Differences aren't big, but there are slight differences. And just fill in your information, hit Apply for Demo, and literally a few seconds later you'll get a password. You can log in, and you can check it out. All right, so let's go over and check out the Nadex platform. And we have the S&P 500 moving quite a bit today. So we can go and we can look at the indice spreads, and we're just going to look at the S&P 500 and focus on that. And then one thing you can look at, a lot of people don't have futures charts. And so what I tell them is to go over here and look at what's called the master spread. And that's going to be your widest spread. The way you know it's the widest is you look out, so it's like 100 points, 100 ticks wide. This one's 800 ticks wide. So that's your widest spread. And you can actually click on the charts right here. The charts are free. The data feed is free. And you can open that up. And then you can make all sorts of adjustments on the charts. So let's say that you want to go in and you want to set up the settings to have, different size, whether candlesticks, open, high, low, close, things like that. You can do that. You can also go over here and you can choose that, say you want to look at 10-minute charts. Then you can pull up a 10-minute chart. And, you can zoom in, zoom out on it, whatever you want to do. And that's really helpful for, as you said, those who don't have charts. But also, even if you do, it gives you a place to use that. And we'll load that one more time for you, let you see how the 10-minute charts work, and then we can actually maximize that and see what the S&P 500, basically this is the price action of the S&P 500 today. So with the S&P 500 moving like that, what opportunities could you have taken this morning? And when you're looking over here, you can actually see that you could, buy early in the morning around here. So obviously the market's moving up. It does a pullback and it's ready to launch. So if you were ready to get in on, the pullback right here where it was basically hitting this same support line, then you could get in and you could go from there. So now let's pull that up and let's check it out and go, what were the opportunities to trade through the end of the trading day that existed this morning? So there's two different ways to look at that. You can look at the 8 to 4:15 and you can look at the dailies. So let's go here and check out the 8 to 4:15s. And on that, what we can see is that there's several spreads. And we want to find a spread that's going to be closest to the floor. That's always your goal. It was this morning, around 13. So I would want to probably we got it one that's 13.35. So I'm going to run that a little bit. All right, go ahead. We'll look at it.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of tfnn.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, well, welcome back to the show, everybody. We got a few different things that we can check out here. We were talking about the S&P 500 has been moving up and just took off this morning after the several pieces of news came out. And so what we want to do is we want to check out the best way to maximize that. And, right here you have the master spread. We can take advantage of the master spread, but there's also other things that you can do to take advantage of the market. And you can go in and there's different spreads that happen throughout the day. So do you want a 2-hour spread? Do you want an 8-hour spread? Do you want a daily spread? And really, I don't care how long it lasts as long as it lasts long enough for me to make a profit, right? So you want the right one on there. And if you want to maximize, you think the market's just going to move up all day. Obviously, it basically moved up this morning and stopped. But you had a few different options. And if we just look back at just the daily trades, what were available when the market was down here at 1332. And so the market was down at 1332, and we go in and you log into your Nadex account, and right here, so this is a Nadex demo account. You log into this, and we go and we can check out the US 500. Well, on the US 500, we can go in here and we can look at. There's really two different ones that last all day besides the master spread, and so you're going to look at your two different options. Okay, which one has the closest price to where the market was when you're ready to trade? So if you're ready to trade and the market was right around, let's just say, 7:30, you're looking at 1333. A little bit later, you're at 1331. So somewhere between 1331, 1335 is really what you're going to be looking for. And so when I look at all these trades right here, I see a 1330. So it's really probably an ideal spread. It's 400 points wide. So it gives me a lot of profit potential. So on this trade, I just click on here, and it'll pull up. So I'm clicking the daily right there. It'll pull it up for me. and I can look at, what my available options are. So I have that 1330, 1370, and now I can open the chart, and this is a great way as you're learning to look at, how did the spread move. I can open the chart on the spread itself and see how the spread was priced. So it's not going to mirror the market, it's going to actually reflect the spread. And so this morning, right here in the morning, you could have came in and you could have bought the spread for 1333.8, okay? So I'm pretty close to that. Let's see, I'll click on here, and looking at the mark, we are looking at about 1334. So if I would have bought this spread at 1334, what would have happened? So you can go, okay, well, I want to figure that out. You can actually go in here, type in 1, and then just type in 1334, okay? So that would have been a $40 risk and a $360 profit potential on one contract. So if you went in and you did, say, 5 of them, that would have been a $200 risk with an $1,800 potential reward. And your risk and your margin would be the exact same. Okay, so you only have to put $200 to place this trade. Doing 5 of them would be like trading the U.S. 500. And what that will allow you to do is it allow you to go in and really maximize the movement that's been happening already on the S&P 500. So you can go in. You cannot lose money below 1330. No matter how low it goes, you won't lose money below 1330. You can make money all the way up to the ceiling, which is 1370. But the great thing is, because you're buying right down here when the market's at a low, the great thing about this is it actually allows you to have the chance to not worry about getting stopped out. Because what if it does decide to go ahead and just turn around and fall? Then what is your plan? Well, your plan here is, you know what? I know what my risk is. It's a couple $100. That's nothing. It's a 4-point stop loss, okay? So a 4-point stop loss on a trade where I have, 4 points. If you're trading the S&P 500 futures, that'd be a 4-point move against you. So it's only a $200 risk, $1,800 reward. So now where would we be at on this trade currently if we were in there and we were trying to figure out the best way to take profit on the trade? So the easiest way to figure that out, so now that we know what our risk and reward is here, we can look at, where is the market priced currently? And the market is currently priced at 1347.9 on this spread. That's where I can get out of it. So if I go in here and I look at that, I go, all right, well, if I could sell, if I want to sell at this moment, if I would have bought down when it was at 1334, so 1347.9, and then minus 1334, I get 13.9. All right, I want to get rid of the decimal place. So basically, that's 139 ticks, okay? So if I did 5 of them, I would be up $695 right now on the trade. So that'd be just placing that trade. That's over a 300% return on the trade, $200 risk, $695 reward, and that's if I get out right now. So you have a lot of different options that you can look at, and you also could have looked at, straddling the market, okay? So you could have went in, you could have decided to both buy this spread that we're looking at right now, and you could have sold the spread below it. So what could you have sold this one for at about that same time in the morning? And, because whenever you see a market at a major level, you're trying to decide, do I buy, do I sell? And this will give you the chance to do both of those. And so you go in, you look at the market in the morning, and you sort of see there's not much prices after that because it just kept going straight up. So if you would have bought it early in the morning, it would have been around 1328. We have to compare exact time to time frame. But if we look at 1328, then we're looking at basically 2 points of stop on the trade. So 2 points would be like $100 literally risk. So you could have came in on this trade. You could have sold this spread. And if we put on this spread that we sold 5 of them, and we sold them, let's say this at 1328, okay? We would have $100 risk on the market. If it would down, we have a $1,900 profit potential. If it goes up, we have an $1,800 profit potential. So let's get rid of just, this right here, $300, right? So we basically have a $300 risk. Well, if we would have done this trade this morning, we could have went in and made over $600 on the trade on a $300 risk, whether the market went up or down based on how the market actually did today. So it's pretty cool. You can really play with it. You can start stacking them together, and you can even layer in different types of trades. And one of the things we talked about yesterday was going in and looking at the binaries. And so if you go down here, you can actually look at the US 500 binary. So the spreads are really simple. Floor, ceiling, where you buy and where you sell, that's your difference. That's your profit, okay? But if you go over here to the binaries, and what you're able to do is look at the exact same type of trade and go, hey, if I think the market's going up, what would have happened? So right now, we're looking at the market, and we can see that, it's priced up here, 1348, 1350. And So if I go over here and go, well, what would have happened if I would have actually bought the 1350, 1348 spread this morning? How would that impact my trade? How would that look? And since that's right where the market's at right now, or a little bit lower, but yeah, that's about right there. So we got 1347. So if I would have looked at this trade, I can actually pull up and check out the chart on it. And I can see the difference in the binary price. So this is now a binary chart, okay? And this morning, you could have bought this trade for $5, okay? You could have went in and put this trade on, and you'd be up at $50 right now on the trade, okay? So if I pull that up and actually click on the buy on the 1347 right here, and click buy, and then click 1, and then let's change my price because to reflect this morning, so you can sort of see what the risk would have been like. Then 5 So what if we wanted to actually compare the two together? Look at that, it's pretty similar, right? So $100, $1,900. So this one actually would have paid off a little bit more, about $100 more. Now the spread is better in the sense of if it moved up at all from where we bought it at, we're making money. The binary, you are making money as it moves up, okay? But if it closes below that and you haven't closed it before it, you'd actually lose. So what a binary is saying is on the US 500 September futures S&P E-mini contract, it is going to be greater than the price of 1347 at 4:15 Eastern. So that basically would have been the trade you'd be making this morning. And now you can get out of it anytime, but you can get out of it right now. So if you bought it for $5, you could sell it currently for $62, okay? So you don't have to wait. And that's really one of the big things I want to focus on the show is just making sure that you understand that you can get out of the binary trades. Don't just put on the $5 and $10 trades and expect them always to move that far. Today, hey, that's happening. Now, if it falls back, then somebody who is up, literally 100% on their investment there, because you put in, $5, you're going to be up quite a bit. Way more than 100%, about 1,000% return there. But you're up a lot on your investment. You put in $5, you're up $62. And, do you want to wait till it gets all the way there? Probably not. And one of the things that you can do is you can go, if I buy a $5 one and it gets to break, to my price level, I may decide to take my profit. And eventually it actually will become, worth 80 and then 90, and it'll keep rising in value. The further it gets above the price, the more it's going to be worth. At expiration, it's actually going to have a payout of $100. So it's really simple. All the binaries have a $100 value. If I put up 5, then my reward profit potential is $95. And again, one of the things, like I said, go in and look at different trades and go, what would I like to do? And if you have a demo account, it's even better because then you can go in the morning and you're already trading, you're doing your thing. Nadex is new to you. Go in and play some trades based on how you trade and see how the reward risk potential works out. So when you get in, when you get out, things like that. And it's you don't want to just change everything you're doing all at once. You want to look at, hey, is this a product that gives me an advantage? And in a lot of ways it is, as long as you do it the right way. Another really helpful tip is, you may want to go in and maybe you want to scalp with these. Maybe after a few points, you want to get in, you want to get out, 3, 4, 5 points. So you can actually look at the ladder, the price ladder right here, to help you determine what the price would be if the market were to move right now, in the next so many minutes, whatever. But basically, if the market were to move, how much profit or loss would take place? So right now, if I were to sell this for $20, okay, then, what would the price change be if the market were to, drop? And it's just very, very helpful. It's like, or if I were to, let's say buy this, makes it a little easier for going down. So if I was to buy this for $23 and the market moved up 3 points, it'd be worth $39.50, okay? If it moved up another 3, it'd be worth $62. Another 3 would be worth $80. Another 3 would be worth $91, okay? So I can go, okay, I can base my trade based on that. So if I bought this trade right here for $10 and then moved up 3 points, then I could actually make $20. I'd make 10, so it'd be worth 20 on the sell side. So I could double my money on a 3-point move. And, if you start adding that up and go, okay, well, what would I put up for that trade? So 3 points, if I put up, say 10 of them, okay? Put up $100, make $100 on a 3-point move. So really not that bad. And, if you go, well, I want to equalize it out to what I would do, maybe 3 points of risk. Well, 3 points of risk would be $150. So put up $150 on a 3-point move, make $150 on the binary. And if it really keeps going, you can put on more. And remember, you're only risking $10. You're only risking $150. So you could let it move 3 points. Maybe after it moves another 3 points, you sell off half. So sort of at double, sell off half. So when you're at $300 profit, sell off and take $150 profit. Now you have $150 that if it does really move, maybe you go in after another 3 to 6 points and you sell off 5 more. And then you let it go a little bit further and you have a couple left that, hey, maybe you hold those couple and just see if it really just takes off. You make, 50, 60, 70, 80, $100 on it. But, I highly recommend don't go in and just buy the $5 spreads. Today it worked. Okay. Today you went in, you bought them for $5. It shot up and, the market just, has really shot up and has so far remained pretty stable on the upside there. And, but that's not always going to be the case. Now we are about to go into earnings and you really want to be thinking about that. I talked about this a little bit yesterday is, one of the big things about that sort of helps move the market is, unless they're just really bad, earnings sort of drive the market due to the seasonal factor that funds are expected to match, okay? And we talked about the other seasonal factor today, is that with those funds, what happens? Well, when people get paid, well, they're all getting paid today, okay? You have people on the 15th getting paid today because the 15th is a Sunday. You also have people getting paid on Fridays. When they get paid, their money goes into mutual funds or their 401k, then it goes into mutual funds, and then it goes into stocks. And I don't know if you recall, but when we were talking yesterday, I actually said that all that money going to flow in, that's going to cause the payroll cycle to take place. And it's actually, like I said, there's a study on it that actually shows that almost all the gains happen around this time in the first of the month. And so a ton of money pumps in, even when it doesn't make sense, money pumps in. So it has nothing to do with your technical analysis at all, or not really your technicals, meaning like where my support, resistance, all that stuff, has nothing to do with that. Doesn't have to do with fundamentals and how good or bad things are, okay? It doesn't really even have to do with statistics. And the only fundamental piece of it is people are getting paid. The only seasonal piece of it is people are getting paid. So fundamentally meaning like that's how the U.S. works and operates, and then seasonally that's when it happens on a consistent basis. So when you put those two things together, you really always want to keep that seasonal thing in your mind of, is there a chance that the market can move up today based on seasonal cycles like the payroll cycle? And that has definitely had a dramatic impact, of course, on this day with the huge move up that we've had based on, the last few days that we've had that haven't all obviously been big up moves, most of them being down moves. So, keep that in mind, use that to your advantage, and, start paying attention to seasonal cycles. There's a lot of very, very cool seasonal cycles. We'll bring up more of those in our future shows and just start laying them out for you. And there's even seasonal cycles on days of the week and times of the day. And times of the day is probably one of the biggest. People go, times of the day, that's a seasonal cycle. Well, that's definitely a seasonal cycle, okay? Because it's a season of the day. So there are different times of the day that different things are happening, right? So you got the European session, and you have the U.S. session. You have the Asian session going on. But even inside those three sessions, there's a cycle. So you got the opening, okay? You got when all the pits open. You need to be aware of that. Right? If you're trading things like gold and stuff, when does it open? Because it doesn't open at 8:30, right? So you need to know when those things open. If you don't know, a really great resource. Stop over here, and you ever want to know when do like the pit traders open? That's when it starts getting loud. And you can go over here and you go to cmegroup.com and simply pull up things like if you want to look at metals, then you can check out the metals right here. Go over to gold, pull it up, and you'll be able to see it right there. All right, we're going to be right back real soon here after a break. And just make sure you call with any questions that you have.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
All right, everybody, welcome back to the show. Diagnostic Trading Hour here. And we want to go ahead, and one of the things I was talking about was seasonal cycles. And I want to go in and just look at that and just show you some things that you can know about. Is you want to know when certain markets open and when they close, okay? So if I go over here and we're looking at gold futures, look at the open outcry markets, okay? This is really important for you to understand because this is really when the volume should be taking place. It doesn't mean the market can't keep moving, but the floor traders, the guys down on the fifth, the institutions that are trading down there, this is when they're trading it, okay? So it's actually going to open at 7:20 in the morning Central Time, so 8:20 Eastern is when the gold markets actually open up, and they're going to actually walk off the floor. They're closing down the pit, okay, at 1:30. So that's something to be aware of. And whenever you look over at Nadex, you'll actually see that they try to actually line up a little bit with this to help you out. And so if we go to Nadex, we actually check out the gold contracts here. We got, yeah, they already, so they're closing them out. So they get out of there before it becomes an issue. But you want to be aware of that seasonal cycle, that you don't really want to be trading a lot of times after this time unless you're really relying fully on just technical analysis. You've got really great risk management. Everything's put into place. But that's a cycle. And there's different cycles. So you can go over here and you can look at, you got the metals, of course, but you also have the equity indexes. You can go over and look at, like when does the S&P pit open? And you just go to contract specs and scroll down here, and you'll see the open outcry. So, and on the trades here, like I said, you can choose the time frames that work best for you, everything else. But really, I mean, they're going to start up in the morning and 8:30 there, and then they're going to close later in the day. So you want it, again, I want you to be ready for that. And this is your Globex contracts. On the floor there, they're actually going to be trading the full contracts, the S&P 500 full contracts. And it's like, where are the contract specs? And got it right there. So that's open outcry 8:30 to 3:15. And so, again, be aware of that cycle. But also when you're listening, and I like to listen into pit feeds. And a lot of times when I'm trading, I'll listen to the pit just during certain hours. And, they'll leave for lunch. And so when you got Asia going to bed, Europe going home, and the U.S. guys leaving for lunch, that's when the markets get really quiet. They get flat. And so you don't want to trade like all day long, thinking that the market's going to be the same all day long, okay? Now, if you're in a trend and you want to ride that trend, by all means, ride the trend to the end type thing. But, if we look at just the charts from today, I mean, we look at let's say we got euro dollar, and, flies up. Boom, and then just sort of goes flat on us for a good chunk of the day there. And, so you can look at different things, and you'll see, like, they move really big in the morning, and then they slow down. And they're slowing down because, again, Asia's going to sleep, Europe is going home, and a lot of the guys, when they walk off the floor, they don't come back. They realize when they come back, they lose money. And so get in there, and if you're trading, get in there and make your money. Make your money in the first few hours. The idea of trading is to have a lifestyle, not to have a, 40-hour-a-week job. And the best traders I know that are trading, short time frames, so a day or less, those guys are coming in and they're just trading for a couple hours and they're walking off. They're usually not trading all day long unless they just see some big move that justifies it. When they see that move stop, when they see it, basically break down, they don't want to be in there and constantly taking on that continued risk and that continued problem of, hey, I've made money today. Do I want to give it all back? And, go out, spend time with your kids. One of my favorite things to do is to go out there and, just have fun and pick up my daughter. Sometimes I'll pick her up early from school if I can, so she's getting old enough now where it's a little bit hard to do that. But I'll go out there and I'll pick them up, and we'll go to the zoo and we'll do just whatever we can do to spend time together. And that's really, to me, that's what trading's about. It's about having time with your family, having things that you want to have and that you need to have. And it's not about sitting there for 8 hours and stressing yourself out and giving yourself a heart attack. So. But look at those seasonal cycles. Also, the end of the day. So, the bond market. When the bond market close. There's a lot of things like that you want to be aware of. You want to be looking at anytime you're trading. Don't just come in, and I think that's one of the biggest things. But you'll have a great day. And I think we're going a little bit longer here. But you'll have a great day, and I'll talk to you soon.